Hey everybody, happy Friday. So it's a good day as well all round because I just heard Sam Bankman-Fried is being shuttled back to prison and may he never see the light of day. So that's something to celebrate today. Anyway, it's our monthly Miner video. Jeff Hammer, on the road, Jeff. Travel safe, buddy. This is an interesting one, and boy, has this been an incredible year. We'll explain in a minute why those who missed out on the mining revolution and all things blockchain were really out of order. So we'll be unveiling the new mining model today. We're working on it for months and months. We'll talk more about that too. It is a hot topic, so let's just jump in. And thank you all for coming. And disclaimer, this is edutainment. Analyzing miners is probably the hardest thing to analyze. It makes analyzing crypto really easy. Analyzing stocks really easy because there are so many variables with a miner. Each one, all across the board. Age of equipment, cost of electricity, cost of electric delivery, age of machines, cost of staff, cost of real estate, you name it. How much they HODL, how much they sell, how the balance sheet structured. It is really tricky. So let's just jump in. And before we do though, this is interesting. This is blockchain money makers, blockchain and crypto ETPs. Dominate the 2023 leaderboard. The results for the top 15 ETFs and ETPs are all crypto related. So if you ignored blockchain and Bitcoin so far in 2023, you are SOL, and that does not mean Solana. And you know my take on ETFs anyway, and we'll talk more about that later, but this is crazy. The number one ETF so far this year is Valkyrie Bitcoin Miners ETF, up a whopping year-to-date return of 227%. Wow. It's crazy. But anyway, that's why we make mining videos. And a quick shout out to NL, who is a member in Patreon. And our marketing folks dropped this in the deck, so they said I should share it. We do have a couple of spaces still open in Patreon. And this is from a member. I've been a Patreon subscriber for only a few months, and my mind is blown. It is exactly what I needed to narrow my focus. I have never felt so optimistic about my own personal financial future. So thank you for that. Thank you to the marketing department and NL for putting that in there. And we appreciate you as well. Anyway, let's talk about the new miner model. Again, thanks to the dev team and DJ who have been patient with me. We've been hammering this out for months and months now. And it is ready to showcase what I can do. And we'll see. So let's look at the companies we analyzed so far in this. And the list is growing. We have all sorts of new companies in the list. You'll probably notice like MIGI, Any is Digital Sphere, I think. Sphere Digital. We've got Cipher and a few more. And it's really cool because the more data points we have, the more analysis we can do. And part of this model actually creates a whole composite score around ratios and proportions them in percentage terms. So even if, say, there's a top and bottom in the past, it would be a score of, say, 10 miners, 1 to 10. Now it's way more sophisticated. So let's go. And let's look at the miner performance last quarter. You can see over the last approximately 90 days, the results have been pretty stunning. We have a company up there called WULF, up 282%. Bit Digital, 183%, Cleanspark, 157%, Riot, 146%, Marathon, 138%, Cipher, 132%, Iris Energy, 126%, etc. If you look down the list, you'll see Bitcoin up 25%. How can a Bitcoin miner go up 282% while Bitcoin only goes up 25%? And that is the beauty of the miners. But there are some that didn't do well, like Argo, down 12%, and Digital Sphere, down 22%. So not all roses, and everything is different. So the other thing as well that I try and do is build ratios around the climate we are in. And we are going towards the halving. So you want a very lean, mean miner. You don't want a miner with a lot of debt. You also want a miner that begins to HODL too. Talk more about that too. So these are the miners today that are in this list, and you can see top of the list, big performer today is Cleanspark, up 11.26%, DigiHost 4.6%, etc. HUD 8 was down 3%, Bitcoin down 0.2%, And I also included the Valkyrie Bitcoin Miners ETF, up 3.41%. So if you just took, and I did this calculation, an equal share of all those miners and invested, you would have outperformed the Valkyrie Trust. That's ETFs. But anyway, it is still, if it's your only on-ramp, it's a good one. Let's talk about the top and bottom indicator that we have. And basically, we are still in the early bull phase. The blue line is kind of beneath that is kind of bear market. We are out of the bear market. But that dip is pretty nasty. According to the model, remember, this is an indicator that looks at about 22 different metrics to calculate where we are in the market. It'll be very, very important later in about 12 to 18 months. But right now, you can see it is dipping, but still that light blue, which means it's a good time potentially to buy. Not financial advice, of course. Let's look at the hash rate. You can see hash rate is also dipping, just like the Bitcoin price. And this is year-to-date hash rate, again, from the top and bottom indicator model. You can see here that it is basically not far off, basically at the same level it was in the second or third week in January. So this is making life a lot more comfortable for miners and a lot more lucrative as well. So let's talk about miner flows again from the top and bottom indicator. You can see here it's a whole analytics suite baked into TradingView, so you can analyze everything you need to know about Bitcoin. But this is just some of the miner stuff that's in there. You can see here the miner flows are negative, and this means that the miners, and I put in the blue line across the middle, that signifies 0. But when the flows are negative, it means that miners are selling more coins than they are mining. And this can be a sign of several things, including decline in price of Bitcoin, a little bit of that. And then also, if the cost for miners is rising, they have to sell Bitcoin to cover costs. Also, an increase in competition from other miners can force them to sell. And the difficulty, as you know, is going down. So this actually alleviates the situation a little bit, but I think it's mostly around competition. And many miners realizing it's like, we don't have enough hash. We need to start selling some Bitcoin, buying as many rigs as we can and plugging them in, as well as cover costs and cover debt servicing costs too. So we'll focus a bit on debt as well. So it's time for the IA engine. Ready, everybody? Let's go. Go through this pretty fast. A lot of ratios on ratios just to see what I look at and how we build a composite score. So the first of all, price to book ratio. And you want a lower number is better. You don't want a high number. And here, if you look at this, you got MIGI is the winner, NE number 2, DMGI number 3, Cleanspark number 4, Iris number 5, DigiHost number 6, etc. But the optimal price to book ratio is a bit of a subjective measure. I like it to be under 1.5 for miners. Anything above that is kind of in the danger zone. So you could say Bitfarms 1.52 is a little bit in the danger zone for me, HODL 1.54, etc. So again, just my personal preference of how I look at that ratio. You don't want to be red at the bottom either, like Marathon and Argo, not good. Next in the box is the current hash rate and future hash rate, and there's been huge developments on this over the last month or so. You can see Marathon has a monstrous 18.8 exahash, huge, massive amount, and they are planning to move to nearly 25 over the coming 6 to 12 months. Riot 10.7, planning to go to 20 to double. Cleanspark 9, they just hit 9. They were at 3 when I first started analyzing them over a year ago. They've tripled their hash in just a year. That's huge. And they plan to double it again in short order. And then the rest and their plans, again, you kind of want to be big and high and at the top. But of course, you have to benchmark this against the amount of market cap they have. You know, you could have a company worth $1 trillion with 20 exahash. Who cares? It doesn't matter. It's nothing. You want small market cap, large exahash. Now let's look at hash rate growth as well. HUT is expected to grow their hash rate the most from all of these. Cleanspark number 2, Riot number 3, and NE number 4. I always forget the name of NE. It's such a strange ticker. Digital Sphere Digital, Sphere 3D Corporation. What a confusing name. Sphere 3D. Well, they are literally number 4 on this list. So growing hash fast. Let's talk about miner production as well. The production per month, Marathon, a whopping nearly 1,200 Bitcoin mined in a month, which is stunning. Thank you, Darren. Cleanspark, 575. Cleanspark are now number 2 on the list, and they came out of obscurity a year ago. They were nowhere on this list a year ago. Now they're number 2. Iris Energy, number 3. Cipher, number 4. Riot, number 5. Remember, some of the big incumbents have been there for a long time, like Riot and Hive and others. And you'll notice their performance is not that good here at all. Again, it shows you how this landscape changes so fast. It is unbelievable. I need to start doing these every 2 weeks, but I need the monthly data to come in first. So let's go. Let's look at liabilities. It's going to be very important. This is liabilities over market cap as a percentage, and you want this number as well to be low. You don't want it to be high. So if you look at this list here, you will see a couple of things that do stand out, at least to me. You've got Mawson at the very bottom. That's Mawson Digital Infrastructure. And they're at 2.77. That is a lot of debt compared to the market cap. That would scare the daylights out of me. You want things to be in the green as much as possible. Bitfarms, Riot, Cleanspark, HUT, DMGI all have very low debt. Cipher, Hive, and that is a positive as far as I'm concerned. I do not want to be in a high debt miner going into the halving, especially with today's interest rates. Let's look at market cap per exahash as of July 2023. Again, you want a low number here. You want a low amount of market cap per exahash. And let me know if you like this format better than the old one with charts. But here, Mawson wins, and Sphere Digital is second, and Argo third. Sometimes when you have this is how I was able to identify Cleanspark, is because they had extremely low levels of market cap per exahash over time. So that was impressive. When you look at HUT, $343,000 worth of market cap per exahash, that's too much. Too much indeed. Or per hash. I can't remember if there's 3 zeros missing in there, but you know what I mean. It's all relative anyway. Bitcoin mined per hash, you can see here as well. You want this number to be high. Iris Energy wins this score. Hive number 2, Bit Digital number 3, Cipher number 4, Bitfarms number 5, WULF number 6, Cleanspark number 7, etc. You go all the way down the list. Mawson did not do very well. Now remember, sometimes it takes time to enable hash. Like if you buy new rigs, it takes time to set up infrastructure and buildings and plug them all in and yada, yada, yada. It can just be a tedious process. So as companies scale, especially when they scale their hash fast, you'll see this number being dinged because, you know, if you see, say 9 exahash for a company like Cleanspark, maybe they only had that in production over the last week or so, or a couple of weeks. It wasn't all operating for the previous month or more. Next, we look at the HODL bags. This is going to be very important as the Bitcoin price rises. I estimate, as I mentioned before, if Bitcoin price is not at 55K, so the miners could be in very hot water. Those that aren't operating efficiently or effectively in their operations. Here, you can see the Bitcoin held value. And on the right, the more important one is on the right in color. That's the ratio of the Bitcoin held to the actual market cap of HUD-8. Last time I did this, the amount of Bitcoin held to market cap for HUD-8 was at 50%. Now it's at 30% because their price has gone up. Their HODL did not go up. DMG, second place. Marathon, third. They have nearly $400 million of Bitcoin. Hive, 60 million, about 11.1%. Riot, 7.7%, etc. Cleanspark have begun to HODL, and now Cleanspark own 31 million of Bitcoin. Bitfarms own 17.3 million of Bitcoin. So the hodling thing is in flavor. You don't want to hodl at the top of the market. That's where you want to sell your Bitcoin, but you want to hodl it when it's cheap and when it's about to explode in value. And that will help the business too. Next, let's look at the Miner Production return on investment per month. This is the one that I like to do. And it's a key ratio. But again, because the miners are in the process of scaling up and turning on rigs, it's a little bit misleading. So Cleanspark was at 7% last time I did this. Now they're 2.29%. So you can see two things have happened. One, their market cap has gone up. And second, the production ROI has gone down because they're scaling up. Other names that have gotten really good, Mawson, 8%. Really, really effective, but their market cap is very low, and that helps. Same with Sphere Digital. Argo did very well as well. And you get the idea here of how everything is different at a different point in time and how quickly all of this stuff changes. So that was fast. That was just a snippet of some of the stuff we look at and create composite scores of as well. And if you want to amplify your intelligence, please subscribe to the channel. And also a little warning, never, I always say, well, never say never, because I'm in the process of breaking this rule myself with one Bitcoin proxy, but it's not a miner. But you should never, when it comes to holding, say, Bitcoin and Bitcoin proxies, never hold more than 10% in one asset. So if you have, say, a $10,000 bag of Bitcoin, no more than 10% of that should be, say, $1,000 should be in a miner. It should be, or multiple companies. You could have, say, 10% in MicroStrategy, 10% in Cleanspark, 10% in Bitfarms, 10% in whatever Marathon. But don't, just in case one of these things blows up, it's too risky otherwise. But when you see the returns that we've had so far this year to date, maybe it's worth bending that rule a bit. And of course, non-financial advice. This is based on over 8,000 numbers, capital efficiency, exahash, ratios, return on investments, a ton of information behind this. Let's jump in. And one thing I do want to stress as well, one more time, to make sure everybody is very clear. Bitcoin mining is a cutthroat business. I've always said that. And I do believe, I mentioned the 55K number again by April. I'm trying to really dial that in and find out exactly what it's going to look like, depending on the actual hash rate. But it's very difficult to forecast the hash rate out to April 2024. And if a lot of them do slowly start going out of business in May 2024, we could see the hash rate come down, which means it could go back in business. And that's the problem. It's a moving target. Also, efficiency and debt levels are key in this analysis. And also one other important ratio is that Bitcoin ROI over market cap. These are critical and they get certain weightings as well. So here we are after that quick little journey and introduction. The new IA Composite Score. Now, if you look at this is just kind of like a snapshot of some of the actual ratios that we're highlighting just to show you how different they are. Now, you do not want to have a lot of red on this. In a perfect world, it would be all green, but that's impossible to strike that fine balance. But you want to have no red, maybe a little bit of orange, and as much green as possible. And you compare yourself to the competition. And again, this is just a summary of the factors, and a lot more go into this actual study. But again, green is good, red is bad. The ones that we're highlighting here is Bitcoin held over market cap over hash, production over hash, liability over market cap, production ROI over market cap, price to book ratio, and the IA upside, which is based on my price targets for all the miners, which is based on a discounted cash flow model, based on potential profits. So that's where we are. Now, the scorecard, remember, I'll stress this again, it's a moving target. Every month, everything will change, so keep your tap dancing shoes on. What you see, last month I did this, or the month before, the results are different. This is the new composite score ranking, and I'm sharing two things as well. I don't normally share the scores, but just so you guys can get an understanding and think about how you want to weight the miners yourselves and do your own research. If you look at the average of all the different final scores in percentiles, you can see that in the first column on the right with a green header. And at the very top, you'll see Cleanspark winning at 542%. Second place is Bitfarms. No, second place actually is Riot under the average of all final scores. And third place is Bitfarms. Fourth place is Cipher. And you'll see Sphere Digital there as well, up in fifth, interestingly enough. When you look at the loaded score, so what I did was I added a loading of how I would place emphasis on different ratios across them all. Some get 15% score, some get 5%, some get 10%, 8%, all across the board, and weight it as to what I believe is most important, like production ROI market cap, like production per hash, like market cap per hash, like upside targets, discounted cash flows, that type of stuff. There, the loaded score, you can see the score is 70% for Cleanspark, 58% for Bitfarms, and 57% for Riot. So under the loaded scores, Bitfarms does better than Riot, but under the average of all scores, Riot does better than Bitcoin. So I hope that is clear, everybody. And again, when it comes to this big chart, which is, like I don't know, the letters go to CZ or something. It's like 100 columns of ratios and everything else. It'll give you a real headache. But the winner is Cleanspark. Again, they came in second place last time around. And second place is the first time ever I've had a tie. Because of the two ways of weighing the ratios, I decided to give a tie. And we have Riot coming in second place, as well as Bitfarms. Now, Bitfarms is a strange cookie as well, because they are scaling up. They are making acquisitions. They're doing things in the Southern Hemisphere that are very interesting. But again, so far, if they can turn on all that hash that they are planning and keep things secure, they could do very, very well. Now, Riot's much more of an incumbent, but Bitfarms is really coming up the charts fast. But it's not reflected in the price. But it does really well in my ratios. But sometimes my ratios see things and the capital markets don't see things till 6 months later. So bear that in mind too. Or they may never see them as well. And third place, a new third place group is called Cipher Mining. So congratulations to them. And that's the mining story today, everybody. So big thank you to everyone on Patreon. I hope this helps. Remember, one final thing I do want to add is as the miners go up in value, the ratios change because I base everything on relative value. Okay, one company may be better, but they may be expensive. They're better at what they do, but in a market cap terms, they may be expensive, and vice versa. So the idea is always to find the ones that are most bang for the buck. That's why I invest. That's why I buy things that have a lot of future potential. So I just hope that's very clear to everybody. Again, congratulations one more time to first place winner Cleanspark, your first ever joint tie in this analysis, Bitfarms and Riot, and welcome to the stage, third place Cipher Mining, which is the first time I've done an in-depth analysis of Cipher Mining, and they are also proving to be very interesting as well. So we'll see what happens. Big thank you as well to everybody in the chat. Travel safe out there. Everybody, I see a few of you are on the road, Mr. Hammer and others. Hammer time. And I'll see you all tomorrow for the week recap. And there's a small group here, but smart people, because I know this is where the alpha is. Thanks all for coming, and I'll see you all tomorrow. Bye.